Ladies and gentlemen, good day and welcome to Rupa and Company Limited Q3 and 9 months FY26 earnings conference call. As a reminder, all participants' lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Omkar Bhagre. Thank you, and over to you.
Yes, thank you. Good afternoon, everyone. I welcome you all to the earnings conference call to discuss Q3 and 9-month FY26 results of Rupa and Company Limited. On behalf of Rupa and Company Limited, I'm delighted to welcome you all to this call. Thank you for taking the time out to discuss our latest financial results and performance. To discuss our results, we have with us from the management, Mr. Vikas Agarwal, the Whole-Time Director, and Mr. Sumit Khowala, the Chief Financial Officer. They will take you through their results and then we will proceed to Q&A session. Before we proceed to the call, a small disclaimer. This conference may contain certain forward-looking statements about the company which are based on the beliefs, opinions and expectations as on date of this call. The actual results may differ materially. These statements are not guarantee of future performance and involve risks and uncertainties that are difficult to predict. A detailed safe harbor statement is also given on page 2 of the company's investor presentation. Now I would like to hand the call over to Mr. Vikas Agarwal. Thank you, and over to you, sir.
Thank you. Good afternoon, ladies and gentlemen. On behalf of Rupa and Company Limited, I extend a very warm welcome to all the participants joining us today for our Q3 and 9-month financial results, year 26 results conference call. We appreciate your continued agreement, and I trust you have reviewed the financial results and investor presentation available on the stock exchanges. Our company delivered a steady performance this quarter with consistent consumption trend across our key markets. Revenue was driven by a favorable product mix with the mid-premium segment leading volume growth. However, pricing conditions are increasingly competitive across segments, with heightened trade scheme exerting above normal pressure on net realization. Consequently, margins reflected the impact of these elevated competitive intensity during the quarter. On an overall basis, a volume mix delivered 3% growth during the quarter, offset by a 3.8 adverse pricing impact. Revenues for the quarter stood at INR 313.5 crores, marginally down by 0.9% year-on-year. Revenue for 9 months stood at INR 817.6 crores versus 823.8 crores year-on-year. PAT margin for the quarter and 9 months stood at 5.2% and 4.4% respectively, versus 7.5% and 6.4% respectively year-on-year. Exports continue to demonstrate healthy traction with year-on-year growth of 28%, contributing 4% to revenues. Modern trade, including e-commerce, contributed 6% to revenues during the 9 months, reflecting the calibrated channel expansion in a competitive landscape. We remain disciplined on working capital management. Our company generated operating cash flow of 49 crores during the 9 months. As of 31st December 2025, cash surplus stood at 41 crores, reflecting our prudent financial management and strong liquidity position. While the company continues to prioritize volume-led growth in near term, we believe this sets a resilient base for margin recovery as pricing pressure moderates, anchored by a diversified brand portfolio and continued emphasis on operational efficiencies. With this, I would now like to hand over to our CFO, Sumit Khowala, to take you through the financial highlights of the quarter and 9 months.
Thank you, sir, and good afternoon to everyone. Thank you for joining us on the Quarter 3 and 9-month FY26 earnings call. I will now take you through the key financial highlights for the period. For Quarter 3 FY26, revenue from operations stood at 303.5 crores, registering a degrowth of 0.9% year-on-year basis. EBITDA for the quarter stood at 25.7 crores as compared to 38 crores same period last year, registering a degrowth of around 32% on YOY basis. The EBITDA margin for the quarter stood at 8.2%, down by 380 basis points year-on-year. The net profit for the period is 16.2 crores as against 23.8 crores in quarter 3 FY25, which degrew by 32% year-on-year. The PAT margin for the quarter stood at 5.2%, down by 230 basis points year-on-year. Now coming to the 9 months performance, revenue from operations stood at 817.6 crores, registering a marginal degrowth of around 0.8%. EBITDA for the period stood at 60.3 crores as compared to 84.5 crores same period last year, registering a degrowth of 29% on year-on-year basis. EBITDA margin for the period stood at 7.4%, down by 299 basis points. The net profit for the period is 36.2 crores as against 52.7 crores in 9 months FY25, which grew by 31% year-on-year. We remain committed to maintaining financial prudence and cost control while continuing to invest in brand and growth opportunities. Our focus remains on improving profitability through better product mix, efficient channel management, and disciplined working capital practice. With this, I conclude my remarks and open the floor for question and answer. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Riddhi Vora from SAS Capital. Please go ahead.
Hello, am I audible?
Yes, you are.
Yeah. So industry is facing like continuous pricing wars among the players. The margins are getting squeezed post-COVID. What do you think when the same will be stabilized?
I mean, short term we don't see, but once the export demand picks up, we feel once the yarn prices gets more firmer, I think the trend should change, which might take another few quarters.
Okay. And why are we seeing sharp decline in margins?
Yeah, the main reason for decline in margin is because of the intense price competition going on the market, and our company adopted a policy of aggressive pricing strategies, which impacted our realizations, resulting in lower gross as well as operating margins.
Okay. Thank you, sir.
Thank you very much. A reminder to all the participants that you may press star and one to ask a question. The next question comes from the line of Preeti Agarwal from SK Associates. Please go ahead.
Yeah, thank you so much for the opportunity. I wanted to know that what are your capex plans along with marketing expenditures for FY26?
There are no major capex plans. There will be routine capex of 12 to 15 crores, and for advertisement, our yearly budget is around 6 to 7%.
Understood, sir. Thank you so much.
Thank you. A reminder to all the participants that you may press star and one to ask a question. The next question comes from the line of Jay from Star Investment. Please go ahead.
Hi. So, sir, what is your working capital in terms of days for 9 months in FY26?
The working capital days for 9 months is around 230 days.
Okay, sir. That's all from me. Thank you.
Thank you. A reminder to all the participants that you may press star and one to ask a question. The next question comes from the line of Shubhankar Gupta from Equitree Capital. Please go ahead.
Hi, sir. 2 questions from my side. First is, I just wanted to have a deeper glimpse of what is leading to this pricing pressure, which we have been talking about for the last 3-4 quarters. And when in line with that, what are the trade discounts which we've offered for the 3 months and the 9 months period for FY26?
Basically, pricing pressure in terms of providing aggressive schemes to our dealers in order to be competitive in the market, and in order to match the price of the peers, we have to not only we have to pass scheme, but also we have to extend the credit period sometime, and the total discount or schemes would be around 12%.
another 2-3%.
12%. So it's I think gone from around 8-9% to 12% now. So
Yes.
sir, ideally, how we are thinking about this is that ideally it should have led to some sales growth as well, right? That is the whole purpose of giving heavy trade discounts. But even that is not happening. So why, in that view, is not happening, according to you? Like,
Yeah,
why is that not happening?
we have rationalized this price since last quarter. So we are expecting that the sales volume will get up in within this quarter or quarters to come. It would take time because the price has been rationalized recently.
Okay. And so, second point is, that since this industry, as you said that, rightly said that, has been on, aggressive pricing, which is now translating to low growth across, right? So, when and why should that reverse? And sort of course, like, exports is a very small part for us, as you mentioned. So, like, what except exports do you think will lead to a growth for us in the coming years, not quarters, but years?
So we're focusing on other channels like e-commerce, export, modern trade. All these are new channels which we need to focus on, and new areas we are getting into, and new ranges like athleisure and activewear. So those are the ranges, and a lot into women's wear also. So women's wear also we are launching a lot of new products which are very aggressive in price. So in a recent trend we are seeing like when a price market is becoming very price sensitive. So we are trying to create new portfolio where acceptance is more and we have large number of market share, which is acceptable not into GT but modern trade also. So this is how, and of course we need to grow with these numbers. And of course, business doesn't make sense for anybody to with such margins and all. So
No,
we are looking at new revenues, and I'm sure in coming quarters we'll be able to have better performance.
So you mentioned that like there are I think 4 areas, right? Ex-factory areas, modern trade, exports, and government, like government, primarily three. So we have actually seen a degrowth in modern trade from 51 crores to now 50 crores in the last 9 months, right? So what have
It's almost same, but we are increasing the team also. We are talking aggressively to a lot of chains and other formats also. So we are sure in coming quarters we'll have a much better performance there.
Okay, so any guidance on what, like, in terms of how we are looking at modern trade and what is the kind of growth we can anticipate from that?
Next quarter will, because it's a new team and we have engaged a lot of new team for this. Maybe by next quarter we'll be able to share a better complete number.
Got it. And were we able to, like, hire the head of sales, which I think there was some attrition on that front. So have we been able to find a replacement, like a replacement?
Attrition for?
The head of sales.
Yeah, head of sales, we have got one. We have got an experienced who has recently joined 2 weeks back. So we'll speak about it maybe next quarter. So once he gets settled and all. So, but yes, somebody has joined in a senior position.
Okay, sir. Perfect. Thank you.
Thank you. The next question comes from the line of Isha Murthy from MAS Capital Investment. Please go ahead. Miss Isha, please proceed with your question. Miss Isha, are you there on the line? A reminder to all the participants that you may press star and 1 to ask a question. The next question comes from the line of Rajiv Jain from Arkan Investment. Please go ahead.
Hello, am I audible?
Yes, sir, you are.
Yeah, thanks for the opportunity. So I just have a couple of questions. So firstly, the mid and premium products are driving growth. So how are the economy and premium segments performing in comparison to that?
This quarter, the economy segment didn't perform well compared to mid-premium and the premium segment. But going forward, we'll come into, we are sure that the growth will also come from the economy segment.
Okay. And sir, secondly, gross margin fell to 26.3% in quarter 3 versus 29.4% a year ago. So to what extent is this decline attributable to mix or pricing or raw material cost, and what gross margin range do you consider sustainable for FY26? Could you throw some light on that?
This decline is basically because of aggressive discounts and schemes floated in the market, and it will continue in the near term, but in long run, it will be stabilized.
Understood, sir. Understood. Thank you, and all the best for the future quarters.
Thank you. A reminder to all the participants that you may press star and one to ask a question. The next question comes from the line of Jia Manik from JMK Capital. Please go ahead.
Hello, am I audible?
Yes, ma'am.
Yeah. First of all, thank you for the opportunity, sir. And sir, my question was that given the flat revenue and pressure on realization, how are you managing the channel inventory? Is there any further risk of discounting?
Didn't get you. Can you please repeat?
Yeah, the revenue have been a little flat and there has been some pressure on the realization. So how are you managing the channel inventory? Like, is there any risk of further discounting?
No, means these are all structural discount, not for clearance of inventory, and we.
Nothing to do with the channel and with the current inventory now.
Okay, sir, got it. And sir, how is Macroman M series and Macroman performing versus legacy Rupa brand? Like, what is the revenue mix split across premium, mid-premium, and economy?
The revenue mix for economy segment is around 50%, and for mid-premium it's around 56%. For premium it's around 10 to 11%.
Okay, and got it, sir. And sir, with the 9-month volume growth at 2%, what underpins your confidence that volumes can accelerate meaningfully in FY27?
As mentioned, ma'am, we are focusing on other new channels like modern trade, e-commerce, and all. We have to focus on export as well. So of course, our continued focus will be there on GT and the new areas. But for the new channels we are building up, we have built up a strong team, and those numbers should come from other channels as well. And on top of that, we are building an aggressive portfolio which is more price sensitive, which has more easy acceptance in the market, seeing the current competitive scenario.
Okay, sir. Got it. And sir, what would be the anticipated time frame for this price normalization?
I didn't get you.
Hello?
Your voice is very low.
Ma'am, next 2-3 quarters at least.
Yeah. Hello?
Ms. Jia, when you are speaking, we cannot hear you properly. Your voice is very low.
Okay.
Volume.
So my question was that what is the anticipated time frame for your price normalization?
Ma'am, next 2-3 quarters at least.
Okay, got it. Thank you, sir.
Thank you. A reminder to all the participants that you may press star and one to ask a question. Ladies and gentlemen, as there are no further questions, I would now like to hand the conference over to Omkar Bagwe for closing remarks.
Yeah, thank you for joining us on call today. I would like to thank the management for sparing the time and answering all the queries. We are MUFG In Time, Investor Relation Advisors for Rupa and Company Limited. For any queries, please feel free to contact us. Thank you everyone and have a great day.
On behalf of Rupa and Company Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.